just run us through your views on the type of activity levels that we're seeing playing out in the various sectors on the market right now, specifically looking at that conglomerate sector where we're seeing a lot of upside in those stocks.
We saw good activity on the market yesterday, trading up marginally. We saw massive activities in UBA and Sky, who obviously seen a lot of value dilution, and a lot of people are looking at those names, looking at the cheap valuation those stocks are offering at the moment. We saw good activity in First Bank yesterday as well. I think we're going to be seeing a lot of activity in the banking names as we approach the reporting season going into March. Yesterday we had Nestle release its full year numbers on the floor. Those numbers did come out strong. We think investors will be happy with those numbers. And that was really much, what we saw in the market yesterday. We expect that going into today, market should trade flat, probably, to the downside because we're seeing a lot of bids at the lower end for the banks.
So some selling pressure coming through, as you say, but let's focus in on Nestle's results and some strong results coming through. As you said, 22% year-on-year rise in first half earnings there, or full year earnings rather, just under 100 billion Naira it made in terms of revenue, but cost growing by 30%. That's outpacing the type of top line growth we're seeing, and profits and margins continue to be under pressure. Are you concerned about this going forward and how it's going to impact the company as we move into 2012?
I have no worries on Nestle. I think the numbers released yesterday were very strong numbers. We saw a 22% hike in turnover, which is in line with their 5-year growth targets to grow the company by 100% in the next 5 years. So this is largely in line with expectation. From a cost standpoint, it was up 30%. This was expected because there've been higher soft commodity prices. They just opened a new factory in March last year, so we expect higher we expect higher depreciation costs. We expect higher interest rates on the loan used to build this factory. And also structural costs. So I'm kind of happy with where the cost level is. I think what you need to focus on is the bottom line. Is irrespective of all of this and the fact that cost was up 30%, we've seen a flat performance in the bottom line, which is in the PBT. Going further down to the PAT line, we've seen a 30% uptick in profitability. This is largely on the back of the pioneer status on the Flourgate factory, which is opened last year. And we expect that going forward over the next 3 years, we'll be expecting lower taxes to be paid by Nestle. They paid a dividend of 12.55 Naira, which is very robust, which is higher than the 10.50 Naira paid last year. And we think that this is demonstrative of the consistent performance and delivery from management from Nestle. We think the market will be excited by these numbers.
There are very good numbers when you drill into them, and the prospects for the company with predictions of 100% volume growth are good, and it will help it improve efficiency, of course, this new factory. But when you're looking at finance costs and over 300% rise for the full year in finance costs, are you concerned around ability to finance these loans in order to pay down them going forward?
No, I don't have any worries. Nestle has paid out 12.55 Naira, which is only 60% of its profitability. So they're holding back 40%. Of note is that in terms of growth, they have both Naira and dollar-denominated loans. So in effect, they're probably looking at hedging any sort of currency fluctuation. So I think Nestle is a cash-rich company. I have no worries in terms of the finance costs. I think it's just these are things that are necessary in the natural course of business, and it's in a growth mode. We would expect that obviously that the best use of capital will be to take on some debt.
So the ultimate question, do the numbers justify the richly valued stock? 441 Naira is the level it closed at yesterday. It's sitting with a PE of almost 28 right now. Is the market pretty much pricing in a growth in the next few years?
Well, at current levels, Nestle is very rich. But I think that if you're looking at what investors are thinking, investors are looking to buy into quality names, looking to buy into strong names, looking into companies that have strong corporate governance. And I think that people are ready to pay that premium for such names. I mean, Nestle over the last 3-4 years have delivered absolutely great growth numbers, absolutely strong numbers, from a top line and a bottom line standpoint. I think that it will be a stock that the market would love. It's a stock that investors will continue to love, and I think that we'll probably still see the stocks stay fairly valued or actually richly valued.
Definitely the darling of investors. Let's focus in on the Naira right now. It has been on a strengthening path, and it seems that less demand from the oil and gas sector has really helped boost the Naira. It seems at those bi-weekly auctions. We were talking about it yesterday and how sustainable this is, and generally investors and analysts are sitting on the bull side with regards to that currency, and of course it is key for importers in the country. Are you also of the view that this rally can be sustained?
Well, I think a few positive things have happened. We're seeing reduced demand for currency. So obviously, any sort of dubious demand for forex is likely been taking out. The big oil majors are also selling. The second largest sellers of currency after the CBN are also selling a lot. We've seen that also crude oil prices. I think Brent hit 122 yesterday. If you also look at the fact that we're seeing a lot of inflows into treasury bills, I think all of this and the fact that a couple of weeks ago, the CBN also announced that there was some value additions to the excess crude account, foreign reserves. So you put all of these things together, these are all positive streaks to see that the Naira will continue to appreciate or at least stay within the band in which the CBN has guided, which is between 155 and 160, irrespective of the fact that we've seen an upshoot in inflation. I think all of these positives are supportive of the Naira.